Welcome to Bears in Exile. Today is May 15th, and this is our weekend market overview. We'll be looking at the Dow, the SPX, the VIX, TNA, UUP, and FXE. And here we are with the Dow. And we had mentioned in the past couple of videos that we needed a close above this candle or a close below this candle. We did not get either one, unfortunately. We had mentioned that we did not like this rally we had on Thursday, and Friday we had this nasty big candle. There for a while it really looked like we were going to get a close below this candle and give us some directional signal, but that did not happen. We do have some crossover of the short-term moving averages. However, they have not completed, certainly have not separated, and the long-term moving averages are still very bullish. Beyond that, we do have this line that seems to be resistance, but it will have to be tested again to make sure that that is the case. All of our secondaries are pointed down and have plenty of room to move. I would not be surprised if we have Green Day on Monday, but I don't hold out big hopes that the week will be green. And if we look at the shorter time periods, we see on the 15-minute long terms have established themselves as bearish. The short-term moving averages are pointed down. Secondaries are mixed, have plenty of room to move down. The MACD and the MAC itself have room to move up, so mixed. On the 30-minute, bearish, and everything else is low. We do have a small uptick here, so maybe it will go up a few points to meet that criteria for fixing itself, but it doesn't look very bullish right here at the uptick, so not as strong a signal as, say, right here where we had our first uptick, had a target, and the target was met. And on the 30-minute, we it's almost it's bearish neutral. It's not very strong yet, it's not very developed, not much to say on the 60-minute. So overall, the Dow is very mixed. We did not get a clear signal, so we're still playing this sideways game. SPX, now this one is very, very interesting. This is probably going to be the highlight of the evening's video. You will see that just like the Dow, we do not have a close above or below the two important candles, that being the green one here and the red one here. We also do not have a close below the neckline of the reverse head and shoulders, which is you know, good. I would prefer there to be a clear signal, although I do think that it's entirely possible that the neckline will be violated again, just to throw everybody off, and then only to have it come back up and go through it again. But that's conjecture and not something that should be traded upon, but that is my feeling. The short-term moving averages are crossing over. They still have a ways to go before the bar, so if we have a bad day on Monday, we could have complete separation prior to going into the bar, in which case we'll have a target of about 1326 roundabout. Now for the interesting part. Now that we don't have all those moving averages clouding everything, here we are on the 60-minute. And on the 60-minute, it would appear that we are in a wedge. So these lines aren't perfectly lined up because when you make them in the daily, the accuracy is just a little bit off. But the general idea is what's important right here. And we did that by the top touching here and continuing on its way, as well as at this bottom here and touching on the tail here and the tail here. Now here is something, and here's the neckline right here. You can see that it was violated, once, pretty big. We do not have a close below it, and it has been pierced a few times, which would suggest weakness, because normally if it's strong, you'll hit it and you'll bounce off. You might hit it again and bounce off, but not getting through it. So that's a bad sign. Beyond that, I have a little bit of a conspiracy theory here. I don't know if anyone else has put this forward or not, but this looks like a head and shoulders pattern to me. Left shoulder, head, right shoulder. And everybody is watching for this reverse head and shoulders to take off and, go through the ceiling and everything. And, you can definitely say, well, head and shoulders should come up and then do this, not come up, come down and then do it. Well, if we go back in time, it's right here, same thing. You had an advance, decline, left shoulder, left shoulder, head, right shoulder, and down it goes. So could that be in the cards this time? Well, anything's possible. The averages are not strong yet. We have a flat line. These are pointed down. 30-minute, they're pointed down. 15-minute, of course, pointed down. So then, at this point, it becomes a question of, well, how important is this wedge? Well, pretty important, I think. The reverse head and shoulders neckline is here, and everyone's kind of, waiting with held breath on that. Could it make everyone panic if this was broken pretty good, enough to do a measured move to meet head and shoulders pattern here? I think it could. This is about 35 points roundabout from the bottom of here to the top of here. 35 points roundabout from here brings us down to just above 1300. 1300 coincides with this right here. So, is that possible? I would say that it is. So, just a little something to think about. So one way or the other, make sure you're protected. I do think that if this is violated, whether or not it goes down to here, that will panic a lot of people. Do I think the bulls will counterattack either in this area or down here? Yes. Could we not even do that and just bounce off of this and go up? Yes. So we have this wedge pattern to contend with, and we do need to plan for the possibility that something really bad could happen, namely this. So, well, this is part one of the weekend overview, and tune in for part two. It'll be coming at you in just a few minutes. And as always, all investing decisions are your own. This video and chart are for entertainment, educational, and consumption of time purposes only.